Hi, welcome back to today's morning report. Charles appraisals on Tuesday the 21st of July with me, Rich Berry, market analyst at Handtech Markets. Looking at the gold chart now as my final one of the day. Now, gold is obviously the big mover in the past few days, really. Big spike lower, and it's still trying to settle down and not actually settled down yet. It's actually rebounded $11 today from yesterday's closing price, so it's still trying to find a new level, trying to define the new expectations of the price and movement as well. But obviously this huge bearish candle is a big negative influence on the chart, but whether it was a bit of a bearish sort of culmination sell-off near term, probably was actually, but that sort of leaves us with a little bit of an issue as to exactly how to trade it near term, because you got the RSI that hit sort of 17 yesterday, and that is really low. And it's looking to unwind slightly, because obviously you've got this big bearish candle, which is very negative for the chart. But then subsequently, the next day's move is meant to be confirming that move. And obviously, if we saw a negative close today, 10 or $11 up on the day. So if you saw a reversal of that move today and then the gold price closing lower, that would be really negative, and I think that would sort of continue the move lower. But at the moment, obviously, the reaction has actually been fairly positive. And what we saw yesterday, interestingly enough, because I spoke yesterday morning about how the fact that you need to find what the European traders were going to do. There was a big bounce early on, and then just drifted into the close, so that's certainly isn't a positive move either. But again, what we've seen overnight in Asia is just a start for a rally. So we've got this low in place at 94.25, and I think if we started to push back above 1,118.70, which was yesterday's sort of mini rally high, then that would be a bit of a signal as well. So that's your initial resistance that you need to watch out for. That's another 10 or so bucks up from here, so that'd be a big rebound on the day. If you think about it, that would be $20 odd, and that would be a big move in the context of gold. But just at the moment, this is still trying to settle down. Momentum indicators still sort of unwinding, really, that big sell-off. But at the moment, we do have a little bit of a technical rally going on. How far it goes remains to be seen. And as I said, that is your initial sort of important resistance. I think one at 1118.70. But I'm sort of in a bit of two minds as to exactly how to play gold at the moment, because we had such a strong downside move, which obviously, yes, is a negative, but subsequently today we've had this rally, so it is a bit of a difficult one. Gold is still trying to settle down. It makes it quite difficult for the near-term outlook, knowing exactly how to play it. But I think until gold settles down, you're not really going to get a great gauge in terms of where we're at. But obviously we're below the 1131 level, which is that old critical support of that November low, and I think we may well see a bit of a near-term technical rally that unwinds some of this sell-off, because it does have a sort of almost sort of like a capitulation selling look to it. But once we've had that move unwind, we can then start to see whether it is a move that's going to be accepted, or whether it's going to be just rolling over underneath that 1131 level again. So it'd be interesting in the next few days to see how this one pans out. But in the meantime, I wish you good luck in your trading on gold as it still settles down. So I'll speak to you later. Thank you.